Eric Muathe with Muathe.com for the weekend of July 16th and July 17th, 2016. Let's take a look at markets here. Let's take a look at how Asian markets closed. And we can see a nice close to the week, pretty much nice gain across the board in Asia. A little bit different at the close of European trade on Friday. As you can see, pretty much a mixed bag. Stocks hugging the flat line at the close of Friday's session. Take a look at the Americas right now. We are looking at Brazil unchanged, Canadian market slightly down. And with about 2 hours to go, we are looking at the US market also trading unchanged as of Friday's trade. So let's take a look at those world charts. Let's begin by taking a look at the Australian market, which managed to close above 2016's prior weekly closing high. And of course, that level was 5469.70. As long as the market is holding above that level, that's a good market. And so market bulls need to hold the market above that level for this breakout to attract more buyers. Having said that, we are coming back to a level on the RSI where we've been expecting resistance, and that continues to be the case. If you go back to the break off the highs of early 2015, off the highs here, this is where the RSI broke down. We've been drawing a line from there, and the market is coming back to test that level even with the price breakout. So pretty much coming back to test the same level here. The last time we found resistance on the same line was during this period here, and we had a significant pullback. So right now, if we see resistance week to week, then we can expect another pullback. If we take a look at the daily is also coming back, and we see this across some markets all over the globe. And first thing here, we can see an improvement in highs, price highs, but the RSI is coming and showing resistance on this negative divergence line. That negative divergence, as long as it remains the case, could be suggesting that now we might be looking for some type of a pullback. Of course, we shall see. Also keep in mind that we are coming back to test the break of the recent RSI high, price highs, So the price did break down here in May, right there, and we had a pullback. And so we are coming back to test that RSI level. It was resistance late May for the highs, and now coming back to test that. Couple that with the negative divergence line that I just drew. You can see that this could be an area where the market can pull back. Let's take a look here at the Nifty. We can see that it held this level here, did not break through that decisively, and while it was attempting and did make a lower low on a weekly closing basis, it formed a nice double bottom on that improving positive divergence line, and since then we've seen a nice spike. But after a nice move this past week, about 9% gain for the week, we see we are coming back to test the top side of the weekly RSI. So until the market can move above this line, one can continue expecting a pullback of some sorts. So that's one view. The other view is a generic view, in that the market has come back to this 50 RSI level and stalled, which was the highs of late December 2015. It came here around the 50 RSI level and stalled, which is here for severe pullback, and now we are coming back to test that same level. If we cannot move above 50 on the RSI on the weekly, and if we show resistance on this line, then we can start expecting a pullback after a nice recovery over the last 3-4 weeks. If you take a look at the daily for Japan, you can see again on the daily coming back to test the top side of the daily RSI. We haven't been able to move above that. That could cause a problem. And in fact, if you go to December highs here, you can see that the breakdown took place once the RSI broke down below this line here. So we draw a line from there, and we see that over the last, let's call it about 8 months or so, market's been coming back to this level and stalling. Here we have uniform activity rejection for the highs there, uniform activity rejection for the highs right there, and now coming back to test that line. So as long as the market is showing resistance on these two lines, the red line and the top side resistance blue line, as long as we are seeing resistance on these two lines, we can start expecting a pullback on a day-to-day basis. So week to week and day to day, the Japanese market has a lot of resistance to move above if it can see higher prices. On the monthly still looks good. Ever since the RSI jumped above this level here, which is this entry, on a hindsight, it was a perfect entry in the market because you would have had this explosive move after that movement in the RSI. So we draw a line from this level, and right now on the monthly chart, this is very encouraging for bulls because we have a double bottom support on that line. As long as that line is holding on the monthly, one can expect this market month to month to be constructive. If we take a look at the Nifty, we can see here continues to hold above the prior weekly closing high. So it's still trading above that as long as it is holding above that breakout level of 8,228,220.80. As long as it is above that threshold, it's a good breakout. In fact, it is even above the resistance level we've been watching. So there was a break. This break here brought the market off the highs in early 2015. We've been drawing a line from there. So right now we are trading above that line. So all the market needs to do here is stay above the red line, and it should continue seeing higher prices. For now, looks good. And unless we can see a reversal here, one has to assume that the market at the very least is stable for now. The one thing I want to take a look at is the Nifty Monthly, because the monthly here does show potential for the market to eventually either test the highs or even move beyond the highs. The reason being that if you take a look at this monthly chart going back to 1990, the line for support that we had drawn many weeks ago has already found support here. Market has bounced off that level, and also the line connecting previous RSI lows on the monthly right here. So the market did bounce on those two lines, and since then we've been higher. So we're talking about this bounce here at about 7,000. So generally, whenever you see a market stage a bounce with uniform activity on its 50 RSI level on the monthly, like here, uniform activity bounce back above 50, the market went to record new highs. Again, we bounced on the RSI 50, the market would go on to record new highs. And here we've gone below 50 and back above the RSI 50 with uniform action, suggesting that the market could easily, I guess over time, go back to make new highs. So that's one of the theories that could be in play here. Of course, we shall see. If you take a look at the French market, the French 40, we can see here that on the weekly, after nice recovery off the lows here of June, the market has rallied back to test the top side of its weekly RSI. So it needs to be above this if it is to see higher prices. Otherwise, resistance on this line on the weekly might suggest that the next swing trade is for lower prices. And this can also be echoed by the German market, as you can see, coming back to test the top side of its weekly RSI. So it needs to be above this resistance line. Otherwise, we might see a pullback after a nice move this past week. Also, there's another layer of resistance if you take the break. So this break here in, let's call it June or April, around July or August of 2015, brought the market off the highs there. We've never been back to those levels. So we draw a line from there, and we see that ever since that break, market's been showing resistance on this red line. You can see here uniform activity rejection for the highs there, uniform activity rejection for the highs there, uniform activity rejection for those highs, coming back now to test that red line also. So if the market cannot move above those two lines, then definitely we should start expecting a pullback if the market does not clear those two resistance levels. Otherwise, if it moves above those two, then we can see the market adding on to the current bounce. If you take a look at data on the monthly chart going back to 1990 for the German market, you can see that even recently there was this RSI movement in late 2011, which corresponds, so this RSI movement corresponds with this entry, and since then the market's of course been trading higher. So we draw a line from there, should be something like this, and what we can see here is that the market has bounced on that same line on 3 occasions, here, here, and again here. So that by itself might be suggesting that month to month there is a chance that this market eventually goes on to trade at highs beyond last year's highs. So because of the bounce here on the RSI, multiple bounce, triple bottom bounce, as long as that is holding and the market continues confirming that that has held, it's not out of the realm of question that we come and make new highs here. In fact, if you go backwards on this long-term monthly chart, you'll see that every time we move above the green line, the market stages a massive rally. We bounced on the green line, the market recovered. We moved above it here in 03, the market went on to a nice run. We went above this sometime in 09 here, the market moved higher. So this line has been critical in studying rallies, or at least in stemming pullbacks in the market. So net, this chart does suggest that month to month markets, as far as the German market is concerned, there's a chance here that we might see a move higher over a period of many months. If we take a look at the Canadian market right now, back above the previous 2016 weekly closing high of 1422.78, 226.78. As long as it is holding above that level, let's give the market the benefit of the doubt to move higher over time. The only problem here on the daily, and we've seen this in other markets, is we are making slight higher highs in price improvement, but the RSI is not making a higher high. That negative divergence might set the stage for a pullback, even though it could be short term, but that's the setup for now. And also on the hourly, we can see that the market continues to show this improvement in price highs, but the RSI did not follow through, coming and showing resistance here on multiple occasions. Hour to hour, the market has been rejected. So this negative divergence on the daily and the hourly could set the stage for some type of pullback. Kind of pullback we might see, it's hard to tell the magnitude, but for now the setup is there on the daily and the hourly for some type of a pullback after a nice run off the lows of late June. If we take a look at the Brazilian market by way of the ETF, the EWZ, that trades in the US, we can see here it continues to trade very well after moving above the prior 2016 weekly closing high. The level there was 29.29. It continues to hold above that. So maybe with that breakout on the weekly, as long as it is above this price range, the stock could, or the market could, have a chance of recording higher levels. Now, if you take a look at a 5-year weekly chart, in fact, actually 8-year weekly, so 8-year weekly chart, what we see here is we're coming back to test a prior break. So let me show you that line here on the RSI, this RSI break in 2010. So this break initially brought the market lower, and since then it's been a problem for markets as far as the RSI is concerned. Every time we hit this level and show uniform activity rejection, the market does make a short-term high. We came close here for the highs there, resistance during this period for the highs there, and now what the market needs to do is hold above that red line. So the market needs to trade well, hold above that red line if it is to see higher prices. In fact, if you take a look, go back to that 2-year weekly, the key to momentum is if the RSI can hold above 69.1. Staying above 69.1 on the weekly RSI is what bulls want to see. Otherwise, failure and rejection when trying to hold above 69.1 could be a problem. Right now trading exactly at 69.1, so we'll see what happens. If it can't close above that and starts pulling back, then that's going to suggest that it is now due for a pullback. If we take a look at the hourly chart for the EWZ, Yes, we've been making higher highs in price here, but the RSI has not really made any improvement. So that negative divergence could be a problem, but I would not expect a major correction in this chart as long as the market is holding above this support line. So as long as the market is holding on this support line and bouncing on this line just like it did during this period here for the lows there, as long as the market is above this line, we should not expect a huge correction. But at some point, should we break through that line, then that's when we can start seeing this market and potentially other markets across the globe pick up the momentum to the downside. Otherwise, be on the lookout for part 1 of the US market analysis for this weekend. And for subscribers, of course, I should have part 2 sent to you sometime on Sunday. Good luck. As always, enjoy your weekend. Peace and blessings. EACS. Mwah.